All right, can you guys hear me okay? We doing good there? Let me know in the live chat if you guys can hear me. I think we're doing okay. Sorry, I do this every time we start these live streams. But hey, what's going on, guys? Happy Friday. Welcome back to another Dividend Happy Hour. I'm so stoked to see you guys here in the live stream so far, all 13 of you. And we have a pretty fun video ahead of us. We've got a kind of a lot going on today, actually. The first thing we're going to get into, guys, the main event, if you will, is going to be a discussion on a particular high growth dividend stock that had a really fantastic week on the stock market. Jumped 7% just this week. So we're going to talk about that. I want to take you guys through a little portfolio update, just show you what happened in my portfolio basically Tuesday through today. Just give you a brief little update. And then after that, we're going to spend some time getting into a little Q&A and a little hangout session. But before we get into that, guys, couple things. Number one, I want to ask you guys, those of you who are here so far, what did you guys bring tonight to drink for the Dividend Happy Hour? Let me know in the live chat. I'd be curious to hear. I personally am sipping on something a little different tonight. Well, maybe not. This is a Cutwater Lime Margarita. If you guys have never had these before, I highly recommend. Any of the Cutwater canned cocktails are just absolutely delicious. I love them. This one's pretty strong too. Like one of these kicks me on my butt, so I probably should moderate myself as we're going through this live stream. But anyway, wanted to ask that, so let me know. I'll pull up some of the responses here on the screen in just a moment. And while you guys are submitting that, I do want to give a little shout out to one of our investor friends, members of the community here. I'm going to put it on the screen. 3D Amazon FBA. He told me recently, a couple days ago, that he just got past the $1,000 annual dividend income mark, officially in the three-figure club, well, I guess four-figure club for dividend income. So, hey, man, congratulations. That's awesome. And now let me go through some of these comments real quick. See what everyone's drinking. Scroll up all the way to the top here. We got Mountain High, who, oh, wrong comment. Mountain High, rocking the Misguided Angel again tonight. Surprise? Go with what works, man. Go with what works. I was eyeing a Warmtown Be Hoppy in the store this afternoon. That might be the next few I pick up. Go for it, man. Sounds good. Sounds like an IPA. I'm guessing that's an IPA. Let's see. What do we got here? So Warren Buffett graced us with his presence tonight. I'm 13 and just opened a Fidelity Youth account. Hey, man, good for you. That's awesome. Congratulations on getting started with investing so early. That's incredible. Steve here tonight is drinking a Blue Moon. You can't go wrong with Blue Moon. Saw me standing alone. Don't get me started. Let's see. What else we got here? Chris tonight is drinking some dihydrogen monoxide, aka H2O, aka water. Good for you, Chris. Good stuff, man. And then Chris, also different Chris, drinking his usual orange Rockstar. Good for you, man. Hey, you got to pick up one of those ghosts, man. You could be sipping on a nice ghost red I don't know what they call it, red punch. I don't know. Basically a different energy drink. Really good though. Shamir, welcome Shamir. Shamir is sipping on an iced tea. Good for you, man. Love it. Jordan here drinking some Four Roses. Is that wine? What is that? We've got Jim here drinking a Stella, classic Stella. I love the Cutwater Bloody Marys, but they like the margaritas are strong. So this guy is 12%, 12.5%. That's pretty hefty for like a canned cocktail. It's good stuff. Okay, Corey is drinking some gin and tonics. That's a classic. What else we got? Maybe Craig here is drinking some Blue Moon as well. We got Kevin, classic St. Pauli girl. Kim Poi is drinking some ice cold water out there in San Francisco. We got Steven drinking a Miller Lite. Stefan. Sour Patch. And man, some waters. We got some Mountain Dew. Caleb sipping on some water, some Mountain Dew. Good. Awesome. Well, hey guys, I think let me take a sip of this real quick and then we'll get into the main event. So, I mean, I'm sure you guys have noticed too, like pretty much all week on the market was a really strong week. So before we get into the main stock I want to talk about, let's just talk about the market as a whole real quick. I mean, pretty much all across the board. Let me see if I can put this up on the screen. All across the board, guys, the market did really well this week. So as you can see here, the Dow just in the last 5 days, Tuesday through Friday, jumped up 2.3%. Okay, then the S&P jumped up 3.3%, 3.33%, and then the NASDAQ jumped a whopping 4% just in the last month. And that's pretty impressive in its own right, guys. But the stock that we're talking about today, I mean, you know, like we already know, it jumped 7%. 7% and completely outformed the entire broad market. We are talking about Starbucks, guys. Starbucks. And let me go over to here real quick. So this is showing the 5-year performance. I want to go to the 5-day performance. As you can see now, Starbucks just in the last week jumped up 7.04%, a very impressive gain in such a short amount of time. And with that, though, still year to date, Starbucks is down quite a bit, which we'll talk about more here later on in the stream. But just so far in 2022, Starbucks is still down, you know, kind of a lot. And coming into this year, guys, they were up over $100 a share, like nearing $120 a share. So it's still down quite a bit compared to where it was, which does call into question whether or not it's a good buy now, which, like I said, guys, we'll talk about that a little bit more later in the video. What I want to really touch on now is why exactly did Starbucks jump so much this week? And from what I can tell, it seems like there's a couple or a few different things going on here. The first of which is that restaurants in general, this is from a report from an article I found on Seeking Alpha, but restaurants have shown a 6% year-over-year growth in appetite for August. So, I mean, as you guys know, there's a lot of talk about us being in a recession or heading into recession. But just based on this, it seems like the demand for restaurants is still pretty dang strong. Especially for a company like Starbucks, who also has some other pretty exciting stuff happening. I mean, they just, within the last week, really, this is their like first or second full week with their fall drinks back out. They just released the pumpkin spice latte for the 2022 season on August 30th. And I mean, as you guys know, that's a really hot commodity. That's a really big draw for Starbucks this time of year. So I think that contributed to the jump in share price as well. But I think the main thing, guys, is on Wednesday, Howard Schultz and the newly announced CEO, Laxman Narasimhan, I think that's how you pronounce it, Narasimhan, something along those lines. We'll just call him Laxman because I know that's his first name. So Howard and Laxman were on CNBC, and Howard had a lot of promising things to say about the CEO, about this new CEO taking over, as well as Starbucks in general. And a few key points from this were, basically Starbucks said on Wednesday that he will never again, never, ever, ever return to Starbucks because he keeps coming in and out of Starbucks, guys. Many of you know this, some of you do not, but Howard Schultz, who's like the founding CEO, he did his time, he left, came back in 2008, okay, hung out for a little bit, made sure to steer the ship in the right direction, left again, and then came back after Kevin Johnson retired, took over the position of interim CEO until they found the replacement, which is this new Laxman guy. And on this, he said, he's never coming back after this because they found the right guy. We found the right person for the job. And so Schultz feels like he's leaving the company in good hands with Laxman. And that, was definitely reflected in the market, in the share price of this company. And a little bit more on this. So this new CEO will be taking over the position starting on October 1st, but you can see down at the bottom of the screenshot, he won't fully assume the CEO title until April 1st. So, guys, what's going to happen is there is going to be a little grace period, almost like a shadowing period, if you will, where this new CEO, Laxman, will come in and basically shadow Howard Schultz for the next 6 months. And basically, this is just to ensure that he is the right guy, he gets the vision, he understands the direction that Starbucks is going to go in, and basically just to confirm that him and Howard are on the same page, and that Howard can confidently pass the baton without any issues and then depart permanently. The market seemed to respond pretty well. And this conversation happened Wednesday on CNBC. You guys can find the full video interview. You just go to YouTube and actually just go to YouTube. This is what I did. And type in the new CEO's first name. Just type in Laxman, and it's the first one that pops up. It's like a 5-minute video, definitely worth a watch. But I think this contributed to the jump in share price for Starbucks this week. And another thing that really helped Starbucks, well, maybe it's too soon to tell, but next week, guys, they have their highly anticipated investor day on Tuesday. I believe the 13th they'll be doing this, and we've been kind of prepping for this for months now. It's going to be an interesting thing to watch. We'll get a lot of information on the future direction of Starbucks and where they're headed, and probably we'll get some more color on the new CEO as well. So that will be something to look out for. But like I said, guys, all of this calls into question, especially with this recent jump. Is Starbucks a buy right now? Is it a good price to buy Starbucks at $88.69 per share? And I think there's a few things that we need to consider here. I mean, the first of which, let's go over to this valuation page. So Seeking Alpha does not give Starbucks a good grade for valuation, a D overall. And we can scroll down and see a lot of red, a lot of Ds pretty much all across the board. But focusing in here on the forward PE ratio, 31.14. Now, in its own right, 31.14 is an extremely high PE ratio. I mean, for us dividend investors, for us value investors who want to buy stocks at a discount, this is kind of far away from what we'd look for, right? In addition to that, this happens to be 147% higher than the sector median PE ratio. So compared to other stocks in the consumer discretionary sector, Starbucks looks to be overvalued by nearly 3 times as much, just based on the PE ratio. But guys, this is where it starts to get interesting. Based on the 5-year average PE ratio, Starbucks is 10% below that. 5-year average PE ratio of 34, which is still really high. 31 is not better, but it is 10% lower than the 5-year average. And going back to the summary page, like we kind of talked about earlier, guys, Starbucks has been, the share price is currently a lot lower than where it usually sits. I mean, we can go back, even in 2021, about a year ago, end of September, it was like $120 a share. And then heading into this new year, it really came down. Okay, got as low as, you guys will remember, it got as low as the low 70s. I think we even saw it in the high 60s right here. May 12th, $69.90. And I don't think that was the first or the last time we saw it in the, below $70 per share. So, all of this is to say, is Starbucks a good buy right now? And I mean, personally, I think there's probably better deals out there. I have been nibbling away at Starbucks, and there's a couple reasons for that. I mean, number one, it's one of my favorite companies to own. I really like the company, not just because I'm a big coffee guy, which you guys know that I am, but I mean, taking a look at the dividend stats, the yield's nothing crazy. The 5-year growth rate, this is a really high dividend growth company, 14.5% for the dividend growth rate. And furthermore, this company still has a lot of growth going on, as we can see, with the exception of 2020. You guys can't really see that well, excuse me, but with the exception of 2020, the revenue is just going up and up and up, and so is the gross profit right here. And scrolling down, looking at the net income, the bottom line, we can see the same is true here. 2020 was kind of a rough year for net income for Starbucks, but they really bounced back in 2021, and they'll probably hopefully do about the same or better in 2022. So Starbucks still has some growth left in it. They're buying back shares, which is great to see. We could talk about their balance sheet, which is probably one of their weaker points. I think that they do have some debt on the balance sheet that is not the most desirable. Yeah. So we've seen the debt go up for sure. But overall, guys, Starbucks is still poised for more growth, which is one of the reasons we're seeing this higher PE ratio. And I think you have to take the growth into consideration here, because a company that does not have as much growth as Starbucks might not be, we might not want to buy it at this price, at these PE levels. But because Starbucks still has been seeing a lot of growth and probably has a lot of growth ahead of it, we might be able to cut it some slack on the growth. And so whether or not it's a strong buy right now, probably not a strong buy. There's definitely more affordable, as far as valuation, more affordable stocks out there, especially in the consumer discretionary sector. And actually, let me know in the live chat or the comments below, if you're watching the replay, what other stocks in this sector you are looking at and think might be a better discount than Starbucks right now. We can talk about those here on the stream. But I think it's a great company to own for the long term. I think right now, under $90 a share is not a bad price at all to buy it, because I do anticipate that once some of the headwinds facing the company die down, which we didn't really talk about on the stream so much, but supply chain issues, inflation is a big deal for Starbucks, and they've kind of raised their prices to counteract that as much as they can. And it seems like they do have the pricing power to pull that off. But once these subside, I think we'll see Starbucks' share price go back up above $100 per share. And I'm just speculating. I don't know that for sure. Obviously, I can't predict the future. But, I think that you will come out ahead if you have a long-term perspective and buy this stock. And all things considered, I don't think right now is too bad of a time to buy it. And I also think that the answer to this question depends on where you think the market as a whole is headed. If you guys think we're heading deeper into a recession, then we might see the price of Starbucks come down even more. It'd be nice to see it get back under $70 per share, right? And so if you think that that's a possibility, then hey, maybe hold out on it. I mean, I personally, guys, I'm just kind of holding strong on Starbucks right now. The last couple of months, I've been buying some here and there, and it's since become the biggest position in my portfolio. But I'm good with where it's at right now. And actually, I'll show you guys real quick. Let's go back over to Seeking Alpha. I want to show you guys my Starbucks position just real quick, okay? So go over to the holdings page right here. Scroll down. You guys can see Starbucks right here. My average cost with this stock right now is $89.95. So it's just above the stock's current share price. And I've worked hard to get this average cost per share down. It was sitting like just below $100 per share not too long ago. Like a few months ago, it was probably $96, $97 for my average cost per share. But because I was buying it so much, it brought that average cost down quite a bit, which actually I think really speaks to the benefit of dollar cost averaging is you can bring your average cost down and give yourself a little more margin of safety. And so instead of being down probably like 10%, I'm now down about 1.5% with Starbucks right now. So yeah, I'm really happy to see that. And I don't have any plans to buy any more right now. I have about $3,500, $3,400 invested in Starbucks. It's my biggest position. It's probably getting close to 10% of my overall portfolio. So I don't want to add too much more, if any, because I really want to stay below 10% for any one particular holding. But yeah, guys, that's kind of where I'm at with Starbucks. And I'd be curious to hear your thoughts on Starbucks as well. So let me know in the live chat there. And now let's move on, guys. I want to get into a little portfolio update and just show you guys what's been going on in my neck of the woods this week. So going back over to the screen here, we're going to go over to my portfolio tracking spreadsheet right here, which I've been working on, guys. I don't know if you've noticed some of the changes in this, but I've been slowly making some tweaks to this spreadsheet, working on version 5.0, and I'm hoping that within the next month and a half, I can roll out the 5th version of that. But I'll keep you guys posted on more details there. But anyway, getting into the portfolio update, as you can see, my portfolio is currently valued at $38,555.62, which is quite a bit higher than where it was at this time last week. So last week, I believe on Sunday's video or at the end of last week, my portfolio was at just under $38,100. So we've jumped up, guys. What is that? About $450, $460 just in the last week. And at last week, the total gain and unrealized gain was 1.93% compared to where it's at now, which is 2.5% basically. So we saw a nice little gain in unrealized gain there. And actually, let me see what going back here, I want to see what my annual dividend income. So last week, my income was $17.66 compared to today, $17.86. So guys, that's actually pretty crazy. Just in the last week, my portfolio jumped up $20 in annual dividend income. That's pretty insane. And right now, I'm sitting at, from a monthly average, near $150 every single month in this portfolio. Once this annual number hits $1,800, I'll be at $150 every single month, which is quite a milestone, guys. Quite a milestone, I must say. And what I bought this week, I'm very surprised to see this number up so much this week because I really didn't buy anything crazy, guys. As you can see, I mean, I put some money into Lowe's. I spent $80 on Lowe's and picked up, 0.4 shares of that. And then I invested another $100 or so into KRC, about $95.50 actually. Picked up 2 more shares of that, which is something I've been doing every week, just putting some more money into KRC, which is the newest position in my portfolio. It's a new real estate investment trust I recently added. So I'm working on building out this position, and this is what you can expect from me, for the time being moving forward. I'm going to be contributing to KRC every week for the time being, and then I'll probably, contribute some more money to 1 or 2 other stocks. I've really been liking Lowe's. Anytime that I see an opportunity to buy Lowe's, I like to do so. And let's see, I want to go back over to Seeking Alpha real quick, talk about Lowe's a little bit. So Lowe's had a really good week as well, up about 5.5%, guys, but I bought it when it was down here. So I bought it on Tuesday the 6th, right in here where it was like $192 per share, and since then it jumped up. So for once, I got the timing right on one of my purchases. It usually goes the opposite way where I'll buy it high and then it'll drop the rest of the week. So I guess I'm glad to see that happen with Lowe's. But yeah, guys, that's pretty much what's been going on in my neck of the woods this week. And with that, I want to hear from you guys. Let me know in the live chat and the comments below what all of you guys bought this week. Which dividend stocks did you pick up? I want to know if we maybe if we added to any of the same ones. I don't anticipate many of you bought KRC, if any of you guys. But yeah, I'd still be curious to hear. So I'm gonna I want to go through the comments real quick. Oops, sorry, I didn't mean to do that. I was just reaching for my drink, but I want to go through some of the comments here and see what we got. See if we can start putting some on the screen. We've got about 40 minutes left in the live stream. Going to cut this off at about 6 p.m. my time. So let's see what we can talk about in that period of time. Okay, take a sip. Whew. Turn off my iPad. Sorry, guys. Let's see. Let's see here, guys. What do we got? Okay. This is a good question. So, Caleb wants to know, if you own Starbucks, it can be your excuse to buy $7 coffee from there. True. Truth be told, though, like as big of a Starbucks fan as I am, I really don't drink the coffee there that often. I mostly drink Starbucks when like I'm going on a road trip or going to be going somewhere where I have to drive like a couple hours or a few hours, something like that. That's really the only time I'll drink Starbucks. Yeah, just day to day, I really don't go there that often. These days, I might go like once a month at most, but it's really not as much as I probably, let on to be. I'm more so a fan of the stock. I really like the high growth stock. Billy here, this is actually really impressive. I own 735 shares of Starbucks. I don't drink the coffee, but I'm happy to own it. Man, that's a crazy Starbucks position. Good for you. That's awesome. Caleb, another question. Why are you so obsessed with the color green? I'm actually not. I'm not as obsessed with the color green. The reason I use the color green in everything, though, is just for the sake of consistency. I don't know. I guess it's like one of my brand colors in the same way that Coca-Cola has their brand colors. Starbucks has their green that they use. We could, let's see, Boise State's got that blue and orange. Every team has their colors. Every brand, every company has their colors. And so this is just mine. It's that color green. I'm just trying to keep it consistent. You know what I mean? Did not mean to rhyme that. Let's see. Oh, this is a good point too. Steve says Starbucks dividend is 14% above the 5-year average. That's good to know as well. Getting a better return than you normally would, a better cash flow return than you normally would because of its lower price today. That's great. Thank you, Steve, for that that note. I wouldn't have caught that. That's great. Let's see. Let's see. Okay, so this is actually good. So Caleb says he likes Home Depot. I own some of that too. Yeah, Home Depot is a great company. Another great high growth company, along with Best Buy for Mountain High. Great company. Best Buy is looking really good right now. Billy says here, I just started buying some under love stocks, Stanley Black & Decker, and a small amount of Intel. Yeah, good stuff. Let's actually talk about Intel for just a moment, because I've kind of been going back and forth on Intel myself on what to do. I have a pretty decent Intel position. I think it's about 4% of my portfolio. And my average cost right now, guys, I think is about $46 or $47 per share, which obviously is quite a bit higher than its current price, $31.46. Intel has dropped quite a bit, guys. I mean, it's just crazy. Like in the last month, it's dropped nearly 10%. What was it? Year to date, down 41%. What's the yield looking like? Almost 5% for the yield on Intel. That's wild. And they still have a low payout ratio, 36%. So I don't know, guys. And even if we go over to the financials, I know this doesn't really reflect recent news or recent happenings with Intel, but still the company is seeing some pretty solid top-line growth. I know we can talk about the loss in market share to some of the competitors. We can talk about this whole fab business. We can talk about the chip shortage. We can talk about all sorts of headwinds as it pertains to Intel. But I mean, I think at the end of the day, it's important to keep in mind, like, what's going on in the financial statements is still growing. Even despite some of the loss in market share, it's still growing. The net income's off the charts. This is kind of declining in recent years, but I don't know. I still think there's a lot to like about Intel. I mean, there's no arguing that it is in the middle of a turnaround, and so that is one of the risks associated with this company. And one thing I always say when talking about Intel is like, if you're going to buy into this company today, you have to do so with the realization that it is in the middle of a turnaround, which could take a number of years. Like we could be talking 5 to 10 years, especially when it comes to this sort of business where a lot of the products take the same amount of time to develop, could take up to 5 years to develop products. And so a lot of the, I guess, shortcomings that Intel has seen, in a sense, just due to the products, could be like just the developments that have been in place for years, and so, or for the last few years. And so hopefully what they're working on now will come to fruition and come to be better than, better than what we've seen the last couple of years from Intel. So hopefully they can regain some of that performance and some of that market share. But Intel is still undoubtedly a beast in the space. I mean, I don't think there's any denying that. But I don't know. And as far as the price go, it's getting to a point. I'm holding Intel for now, by the way, but it's getting to a point where it's getting very tempting. And I don't know how much more I'd want to add to my portfolio, but maybe once it gets above 5%, if it keeps dropping in share price and gets above 5% for the yield, that would be hard to say no to. And I think the same is kind of true with 3M right now, although it's a little bit easier for me to hold off on buying more 3M because I think it's a larger percentage of my portfolio than Intel, number one. But number two, I just don't know. I think I need to see more of a light at the end of the tunnel with this 3M stuff. I don't have enough experience investing yet and enough experience going through these litigation issues with the companies that I own to really know, I guess, how best to proceed. So with that said, I guess it's best to just hold for now, right? And, let me know what you guys are doing with either of these two stocks, with Intel and 3M. I'd be curious to know. And going back to Starbucks real quick, this is an interesting point from Fenders, aka Mr. Income, if you're in the Discord. But Starbucks is a cult, and that's a good thing. Very true. Like Starbucks, does a really good job of developing or building a community. And one of the things that Howard Schultz was saying on that CNBC interview that I was talking about earlier in the stream was that they definitely make it a priority to have the partners, which is what Starbucks employees are called, to have the partners build that rapport and build that connection with the people that come into the store. And I know it's not uncommon to, people make Starbucks a part of their daily routine. They'll go there every day. Some people get the same drink, and sure enough, after going to the same place so many times, people start to know your name, and you get on a first name basis with a lot of the people that work there if you go frequent enough. And that's just another thing that keeps you coming back. You feel like, it's kind of feels a little more like home, I guess. And I think that's an important thing to have for a business like Starbucks. I just got a nice little super chat from Steven. Says, is Verizon a sell or a buy? My average cost is 51. I'll go back up and get back to the comments in a minute, but I want to answer this real quick. So, Steven, thank you so much for the super chat, by the way. I really appreciate that. So, is it a buy? Let's take a look at Verizon, actually. So, and I'll get this off the screen. Your average cost is 51. Right now, it's $42 per share. Man, I like Verizon. I've been buying a lot of Verizon. I think in the last couple months, I've probably picked up maybe between 5 and 10 shares of Verizon just in the last 2 or 3 months. So I've been buying Verizon as it's been coming down, and it's just one of those. I mean, think about it like this. Think of how dependent people are on their phones these days. I think the income, the cash flow from a company like Verizon you can almost look at it as this is how it's been said to me from various people, but you could almost start to look at it as a sort of utility. People are dependent on their phones for a myriad of reasons, and they're going to cut out other things before they don't pay their phone bill. And it is nice to see Verizon's share price going down. I mean, in the last, I guess year to date, they're down 20%. In the last month, they're down another 5.3%. And so what's that doing? It's just pushing that dividend yield up even higher. And now their yield is sitting pretty close to where AT&T's is. I actually don't think they're too far off. And I'm going to pull up AT&T right now so we can compare, actually. So come on, load for me. Okay, so yeah, they're really not too far off, right? So AT&T's yield 6.62%, Verizon 6.32%. Okay, the payout ratio's a little bit lower on Verizon, but still neither are bad. 52%, 47.5%. The 5-year growth rate's nothing to write home about, but that's no surprise. And I think that's a fair trade-off. We get the higher yield with not as much growth. That's pretty typical. And they have a really respectable dividend growth history, 17 years of consecutive dividend growth. And how long have they been making payments? So they've been paying the dividend for 21 straight years. So they have even more years of consistent payments. So that's good. So, we're seeing a lot of stability just in terms of the dividend. And although the share price isn't really doing much, in fact, it's been going down. I mean, in the short term, that could be a good thing. But one thing to keep in mind too, Stephen, with a company like Verizon is you're not going to generate a lot of share price appreciation from this sort of position. I mean, zooming out over a longer period of time, you can see that the share price performance is down almost 10% in the last 5 years. So zooming out across a long period of time, it's still not performing that well. 10 years, same thing. It's down 5% in the last 10 years. And so I think you just have to ask yourself, like, what are you looking for out of this sort of investment? Are you looking for something that's going to, well, I guess, is share price appreciation something that's important to you? Number one, are you buying it more so for the cash flow? Do you want both? I think that would be a good place to start. And if you are looking for just cash flow, if like that's kind of what you're going for, then I think Verizon's a pretty good grab. So anyway, that's my take on it. Thank you again for the super chat. I really appreciate it. That's awesome, man. That's awesome. Chris here, this is a really good question. So what is your overall dividend yield? It seems like it's rather high. Yeah, my overall yield, let's go back over to my spreadsheet real quick. I'll just show you some of my positions, show you what we're working with. So right now my overall dividend yield is 4.63%. Okay, it used to be lower, like it's been above 4% for some time. Like it pretty consistently stays between about 4.5% to 4.7%. When my market return was much higher, it used to be up 9, 10, 11, 12%. This yield was not as high, but I've been taking some losses in unrealized gain pretty much all year, as have many of you guys out there, I know. And so it's pushed this yield up in my portfolio a little bit. And, to your point, yeah, maybe that's a little bit high. Maybe it's not. I mean, I guess it's relative, right? But I feel like I have a really good, and I'm actually going to be talking about this in a future video, but I feel like I have a really good balance of different stocks. I've got some high yield stocks like EPD right here. I've got JEPI. I've got, KRC is kind of a higher yielder, Main Street Capital Corporation, ORCC, Altria Group. I skipped Altria Group, AT&T, Verizon. So I've got some high yielders for sure. But at the same time, I also have some high growth dividend stocks. I've got some AbbVie. I've got some Lockheed Martin's decent growth. I've got Lowe's. I've got Altria Group's also kind of a high growth dividend stock. Altria Group really is a triple threat. Okay, I've got Starbucks. I've got Snap-on. So I have some high growth ones as well. And then, third and finally, and last but not least, I have some just stable, slow growers to serve as a solid foundation in my portfolio. I've got Johnson & Johnson. I've got Coca-Cola. Lowe's is definitely that as well. 3M is that as well for the most part up until recently. We'll see what happens there. Altria Group, Procter & Gamble. These are some pretty, well, even Snap-on. These are some pretty nice stalwarts, some slow growers that I have in my portfolio to, add some stability. And I think overall, Chris, like I said, I think I have a really good balance between all three different kinds of stocks. And as I've learned more about all this investing stuff and I guess where I'm at in my investing journey, I realize that I should be probably more so prioritizing high growth. And that's what I've been doing moving forward, or that's what I've been doing for the time, or for a while now, I guess. I've been buying more Lowe's. I've been buying Snap-on. I've been buying more Starbucks. I've been trying to contribute more to these positions that offer that higher growth, because realistically, I know I'm probably not, unless just some miracle happens and I end up with a ton of money that I can put into my portfolio. But unless that happens, it's going to be probably decades until I'm able to live off of this dividend income. And so from a long-term perspective, it'll be important for me to have, I guess, lower yielding stocks today that offer high growth for tomorrow. And so that's kind of what I'm focusing on moving forward. Hopefully that answers your question. I know that was kind of a long-winded way to go about it, but that's what I do, I guess. Let's see. Let me take another sip real quick. I want to, put some of your guys' buys on the screen because I see those here in the live chat. So let's see. Mountain High, nice divvy increase on KRC. I actually didn't see that. I'll go check it out after the stream. That's awesome though. No, let's just check it out right now. Screw it. That's what we're here for, right, guys? Okay, going back over here. Let's go back to Seeking Alpha, KRC. And for those of you who don't know, KRC is Kilroy Realty Corporation, a real estate investment trust. Nice. They just raised their dividend by 4%. That's pretty solid. Is that above or below the average? So it's a little bit below the average 5-year growth rate. But, you know, we'll take it. We'll take some dividend growth. A little bit of a high yielder. I guess you can add that to the high yield category in my portfolio. Awesome, man. I don't know how I missed that. Let's see. So Craig here says, I'm thinking about adding HBAND this week. What's your thoughts on it? Let's take a look at HBAND. I just kind of talked about them in my video that I put out Wednesday because they have their ex-dividend date is sometime this month. They have a dividend coming out next month. But let's just take a look at like the valuation and dividend stats and maybe some quick financials. So year to date, HBAND's down 10.5%, up 5% in the last month. Okay, the PE ratio is 9.86%, but I think these guys are in the financial sector, right? Yeah, so they're a regional bank. So let's take a look at the price to book for HBAND real quick. 1.21, which is about 4.5% higher than the sector median, but 6.3% lower than their 5-year average. So that's really not too shabby. It does look like they are at a little bit of a discount compared to where they usually sit. Now, looking at the financials real quick, let's just scroll down and take a look at the total revenues, guys. So that's looking pretty good, I would say. Pulling up this chart, pretty consistent growth up until 2020. They took a cut, but have really bounced back in 2021. So that's good. I bet you they're buying back shares pretty well too. Oh no, actually, I was wrong. They're actually issuing more shares. So that is a little bit of a red flag. It looks like 2017 to 2020, they bought back some shares, but really did a whole lot of issuing in 2021. So that kind of blows. And I probably, like before I make that blanket statement, I probably should look into the context of why they issued some more shares. We won't do that on this stream, but I guess that is important to consider. The payout ratio's pretty fair, you know. Okay, 57% in the trailing 12 months. That's not too bad. I think for financials, for banks, we could probably find, like Bank of America, I know for sure has a lower payout ratio. In terms of the dividend stats too, though, like I don't know. So we didn't really look at these. So the dividend stats do look pretty nice from what I'm seeing here. So 4.4% for the yield. This has the payout ratio a little bit lower right now, 48.8%. That's not bad, but still payout ratio is quite a bit higher than Bank of America. 5-year growth rate's not bad either, near 15% combined with that high yield looks pretty appetizing. And then they have a nice dividend growth history of 11 years. So the dividend stats don't look too terrible. Yeah, I guess overall HBAND's really not looking too bad. The one red flag, I guess, if there was one, is the issuing shares. But I mean, it's not the end of the world. So let's see. So Kevin right here said, bought SWK for $200, DCA'd the rest across the other positions in $25 increments. Nice, man. Good pickup with Stanley Black & Decker. Definitely looking cheap. Shaded Light here bought some Pepsi, as he's been doing for a really long time. So are you buying a share of Pepsi every week, or what's your strategy with building out that position? Anthony here picked up a good handful of shares. Verizon, JP Morgan, SCHD, great. Ally Bank, nice. Chris here, good pickup, Chris. Bought AT&T for 16.8. Wait a second. What share price is AT&T right now? It's not that low. Is it? Oh, I guess it is. Wow. $17 a share. I don't know what I was thinking. I don't know what I was thinking. I really don't. I think I thought for some reason like it was near $20 a share. I don't know, guys. Kevin bought a few shares of Altria Group and sold a few shares of HESM. Pretty quiet week for Kevin. Nice, man. Good pickup with Altria Group. Love that. Okay, Chris, nice, man. I just started a position in Walgreens. I can't wait to accumulate more. Solid position. Aaron, thoughts on Comcast? Not too many, but, you know, let's take a look at Comcast real quick. So going back over here to Seeking Alpha, let's take a look at Comcast, pull this up. So definitely seen a big drop year to date, down 30%. In the last month, they're down quite a bit as well, down 7%. Wow. So the PE ratio is 9.5, or the PE, yeah, 9.5. That's pretty cheap. But Verizon and AT&T also have some really low PE ratios in the single digits as well. Let's take a look at the dividend stats for Comcast. So 3.14, super low payout ratio, nice 5-year growth rate, 4 years of growth. I think they've been paying the dividend longer though. So they've been paying the dividend for 12 straight years. So that's looking pretty good. And really, guys, looking at this dividend history, like growth chart, it's actually looking not bad. Like there must have been just like one quarter or something where they didn't raise the dividend. I really can't see why Seeking Alpha only has them at 4 years of growth, because it really does look like they've been growing the dividend since 2008, right? Or at least 2009. So yeah, I don't know. I think that looks pretty good. And looking at the financials real quick, we're seeing some nice growth on the top line from Comcast, seeing some nice profit growth as well. And even as we mosey on down to the bottom line, like for the most part, we're still seeing growth. It's a little bit sporadic here and there, but for the most part, it is trending up. The payout ratio does stay consistently low too, which is really nice. Shares outstanding, they're buying back shares, so that's great. Yeah, I don't know. I think Comcast is looking pretty good. And I'm actually a Comcast customer. I use them for internet. Pretty much have used them for cable when I was living with my parents. So they always used Comcast for cable and internet and phone as well. I don't know. I like Comcast a lot, and they're pretty well diversified. They own NBC, which has a lot of great media. Obviously, they have Peacock as well, which is, I don't know, maybe not the best streaming service, but it does have some pretty good titles. Overall, I like Comcast. Yeah, I think I would probably, if I was looking for another communication stock, I would go with them. I guess there's really not too many other options besides AT&T, Verizon, and Comcast, though, if you're looking for dividend payers, huh? Let's see. So Kama here says $225 into Williams-Sonoma, WSM, HSYM, I don't know what that one is, Procter & Gamble, Nike, and Pepsi. Nice, man. Sounds like a good week of buying. Tommy here says, I would like to buy some Lowe's, Target, and Procter & Gamble, but I have no cash available right now. Well, hang in there, Tommy. Cash will be coming your way, my friend, and you can pick up those 3 stocks. Really good ones to pick up, too. Let's see. See if we can keep going down, guys. I'm going to jump around from some of the comments because I'm about 25 minutes behind right now. Okay, this is actually a really good question. So Marius wants to know, which way is it better to invest $100,000 into my okay, what is the best way to invest $100K into my dividend growth portfolio? Should I invest it all at once, or should I dollar cost average? Really good question. And personally, like with that amount of money, I would dollar cost average. And there's so many different ways you can slice this. You can say, okay, I want to have all this invested. I think this would probably be the best place to start. How long would you want to DCA into it? Because you could draw that out as long as you wanted. You could do, okay, I'll invest $50K every month, be done in 2 months, have it all invested. I could do 5 months, invest $20K at a time, or I could do 10 months, invest $10K every single month, or I could even spread that out 20 months, invest $5K every single month. And I don't really know what the right answer is, like how you should divvy that up, but I do think dollar cost averaging would be the best way to go about it right now, especially because the market is so volatile. Like 1 week, like this week, it's up quite a bit. The next week, it's going to be down. The next week, it's going to be up. So there's a lot of turbulence right now in the stock market as a whole. And so you might be best off just dollar cost averaging over a longer period of time to kind of even that out a little bit and not subject yourself to all of that volatility. Hopefully that makes sense. So let's see. Oh, Shamir, yeah. Just got a free Starbucks coffee with that super chat. Very true, man. Very true. Let's see here. So Be Still Sounds asks, does it make sense to buy both Verizon and AT&T? I think it does. Yeah, I think it does. And I guess I'm biased, though, because I have both. There's some people who are going to take a bet on one or the other. And, I don't know. I have both. I think they're both high yielding companies that are going to be around for a long time. I'm not expecting a lot of share price appreciation from either of those two, but as far as dividends go, I think they'll continue to make dividend payments, and the yields right now on both of them are pretty exceptional. So I think they're both pretty good buys right now. Let's see. Okay, so 12V Electronics says, I need your opinion on GLW. Is that Corning? Is that what that is? Let's go take a look. So GLW, this is an interesting company. This one has been, my friend Suzuki Man has been talking to me about Corning quite a bit in the Instagram DMs. I know he really likes that company. Let's just take a quick look at it. So year to date, they're down about 10%. In the last month, they're down about half that, about 5.3%. Okay, taking a look at the dividends real quick. Okay, not too bad. Decent yield, 3.26%. Moderate payout ratio, 46%. Pretty nice 5-year growth rate, near 12%, with a decent dividend growth history of 11 years. And they've been making payments for 13 years. So that dividend growth, like just looking at this chart, is pretty substantial. That's a lot of growth right there. Really like to see that trending upward. Now, taking a quick look at the financials. Okay, so we're seeing some nice growth on the top line, nice revenue growth here, nice gross profit growth as well. Look at the net income, very sporadic on the bottom line, right? So that is something to keep in mind there. Buying back a lot of shares, very nice. Like to see that. Let's take a look at the balance sheet just real quick. Just real quick, guys. So $1.6 billion in cash on hand and short-term investments, stuff like that, compared to debt. So they have about $5.9 billion in net debt. Let's take a look at the cash flow, see how much they're bringing in there. So $5.9 billion in net debt, and they're bringing in about $1.4 billion in cash flow in the last 12 months. 1.4, 2.8, 5.6. So that's not a terrible debt situation. They have a nice dividend growth history, so that's good there. Low payout ratio. The valuation's not bad either. 14, basically just under 15 for the PE ratio. 17.5% lower than the sector median, and near 20% lower than their 5-year average. So, Corning's looking pretty decent. Like, what does this company even do? I think they make like glass and stuff, right? So display technologies, optical communications, environmental technologies, materials, and life sciences. Okay. So it looks like the glass that they make and stuff goes into products like TVs, computers, probably phones, tablets, stuff like that. So there does seem to be a need for these sort of products that doesn't seem to be going away. I don't know. I think Corning's pretty decent. So I don't know. I don't have much of an. I would need to spend more time with it to really chew on it. But the stats don't look too bad at a glance. So anyway, let's see. Let's see here, guys. What else we got? We got about 12 minutes left on the chat here, or on the stream. Sorry, guys. Okay, so this is a good question. So Bluetooth, Blue Claw, Blueberry. How do you feel about the level that MPW, Medical Property Trust, is at? Nearing COVID lows after a large tenant ran into some financial trouble. Could be a solid level for a high-yield healthcare REIT. So I've talked about MPW, a few different times in recent videos, and it's definitely looking cheap right now, right? So down 30% plus, 37%, almost 37% just in 2022. And then in the last month, they're down another 7.4%. Now, glancing at this P to FFO, which is like the real estate investment trust equivalent of the PE ratio, this is looking nice. 8.06, so very cheap. And this company as well is seeing a lot of growth. A lot of growth. Like revenue is going straight up. Some very substantial growth there on the top line. And if we scroll down and take a look at their FFO, or their AFFO, what they use to pay the dividend, that's going up a lot as well. So on the top and bottom line, they're seeing a lot of great growth, and the FFO payout ratio, what they pay out in the dividend, is not too bad as well. I mean, in recent years, it's kind of slowly mosey down, as you can see from this chart. It is declining as the years go on, which is great. They're able to retain more of those earnings, more of those funds from operation, with each year that they can reinvest back into the business and make more acquisitions or, make renovations on their existing properties or stuff like that, which would be great because then it would mean potentially that they wouldn't have to issue as many shares, which is what they're doing. And it's very common with a lot of real estate investment trusts because they can issue more shares to raise money to make more acquisitions. But if they're retaining some more of the funds from operation as the years go on, maybe they can not issue as many shares, which would be great for us shareholders. But overall, I think MPW is looking great. And the last thing we'll take a look at is the dividend stats. Really high yield, near 8%, right? 4% growth rate, okay. High yield, lower growth rate, that's the trade-off. That's just what we should expect. 9 years of consecutive dividend growth. So that's really not bad. And taking a look at the dividend growth history or the dividend history in general, they've been paying for 16 straight years. So they do have a solid track record of making those dividend payments. So I like MPW. I know, kind of to your point, they had an issue with one of their tenants. I don't remember the tenant's name, but it's their biggest tenant who basically they had to make a loan to help them, I guess, pay their expenses and whatnot. But I believe from what I understand about the issue is the tenant is going to be paying MPW back in full. It seems kind of like a non-issue at this point. And I could have that wrong. I really haven't read into it too deep, but that's what I know about it so far. So yeah, I like MPW. I think it's at a great value right now, and it's obviously a very high yielding REIT. So let's see here. Okay. So Kevin here, going back to HBAND, they issued shares in buying First Merit Bank. So they issued some more shares to make an acquisition. That's not okay. That's okay. Kevin, thanks for that info. That's super helpful, man. Appreciate it. Okay. Let's see what else we got here, guys. Oh yes, Shamir. Thank you for the reminder. I'm not good about saying this, guys. If you have not done so already, please hit the like button, hit the thumbs up on this video. If you're enjoying the live stream, if you like hanging out with me on Friday nights, which I'm so glad you guys do. You guys keep showing up for these things, which is why we keep doing it. But anyway, hit that like button. If you're not already subscribed to the channel, please do so as well. That would mean the world to me, trying to get those subs up, you guys. And then actually the last thing, guys, so you guys know pretty much this entire video we've been going back and forth here on Seeking Alpha. And what we've been looking at is the premium version here of Seeking Alpha. And if you guys want to try this out for yourselves, there is a link in the description of this video to get a free 7-day trial for Seeking Alpha Premium. Definitely worth it. And even more so, the link in the description will get you basically 50% off of your Seeking Alpha, subscription if you decide to be a paying member after that. It comes out to only $10 a month for Seeking Alpha Premium, which is like an unreal deal. It's actually less than half off. It's like 66% off because normally it's $30 a month. With the link in the description, it's only $10 a month. So quite a steal on Seeking Alpha Premium. Highly recommend it. It's going to be one of those things that you'll find yourself using every single day. So it's definitely worth the money, in my opinion. I've been a premium member for probably a year and some change now, and I'm very religious about it because I just use the platform so much. So link in the description if you guys want to try out Seeking Alpha Premium. Let's see here. Couple more comments here, guys. Mike here says, if you don't want to beat the market, buy at Verizon and AT&T. Truth be told, Mike, I understand your point. And actually, I saw your, I'm sorry I haven't responded to it yet, but I saw your comment too, basically saying the same thing about 3M and Intel on the community post. Sometimes though, for some people, this might sound silly. For some people, it's not. They don't care about beating the market. They're not in competition with the S&P 500. For some people, they just want to build enough cash flow. They just want to build enough cash flow to replace their active income, right? They're not in competition with the S&P 500. They're in competition with their W-2 paycheck. And for those sort of people who just want the cash flow, they just want to replace their active income with passive income, Verizon and AT&T will help them do that for sure. And so there's it just depends on what your priorities are as an investor. If you're looking to beat the market, to your point, it's not worth buying Verizon and AT&T. You're better off buying other things. But if you're a cash flow investor who's looking to replace your income and that's your sole priority, then Verizon and AT&T could be a good grab. Hopefully that makes sense. And I'd actually be curious to hear your guys' thoughts on that too. Excuse me. Okay, Taylor, good question. Which would you prioritize? Positions that are down substantially but are already large holdings? Excuse me. Or newer small positions you wish to increase ownership in? Okay. It totally depends. It totally depends. And I know that's not the answer you're looking for. I'll try and elaborate. Just give me a sec to think about this. So positions you are down substantially but are already large holdings. So I think it makes sense to dollar cost average down on larger positions. Dollar cost average down on larger positions if you're okay adding, like having a bigger allocation in those positions. Like, like just speaking personally, Starbucks is my biggest position right now. I think it's 8 or 9% of my portfolio. And let's say Starbucks drops down to $75 per share, which would put me at quite a loss with that company. I still would not, even though I have a good opportunity to average down, I probably would hold off on adding more to that position because it's already a big allocation in my portfolio, and I really don't want it to get too out of whack. And thinking about it in the context of other stocks like 3M or Intel, for example, let's use 3M as an example, just 3M. It's a bigger position in my portfolio. It might make up 5 or 6% of my portfolio. I also don't want to, I can average down a lot on that one because I'm down nearly 30% with that position. But I'm hesitant to because I don't want to make it a larger position right now. And the reason I don't want to make it a larger position right now is because I'm so uncertain on what's going to happen with all this litigation stuff. So I'm kind of just waiting to see what happens. Now, in terms of newer, smaller positions you wish to increase your ownership in, I think that's always good. And I think too, with the implementation of fractional shares, there's room to do both. Like, for example, if you invest $100 every single week, I think you could just split your contributions into two different things. You could put half into a position that you want to average down on. You could put the other half into a newer position that you're working to build out. And actually, Taylor, that's what I'm doing in my own portfolio. I'm buying more KRC, putting some money into KRC, my new position that I want to build up. And then I'm averaging down on other positions that are probably larger positions in my portfolio, like Lowe's, we saw earlier in the stream, or like Verizon, or if I decide to start buying Intel again, that. So I think there's a way to have your cake and eat it too in this scenario, for sure. So Snowden, what's your Discord, Ryan? So there's a link to the Discord also in the description of this video. It's called the Dividenders Discord group. Right now we have just about, I think just over 1,100 active members in the group. Would highly recommend you join. It's totally free to join. You just click the link. It'll take you right there. I am actually thinking about changing the name of the group though. I have a couple in mind. It's something I'm still chewing on. I want to get the Discord group's thoughts on it before I do that. So maybe I'll put out some of those ideas in the Discord here soon. But yeah, definitely Snowden, definitely join the Discord, please. We'd love to have you in there. A lot of the people who are in this live stream tonight are in the Discord group, and it's a really solid community. I'm so proud of this Discord group because it really is it's such a supportive community, and it's so welcoming for newer investors. We're just new people to the group in general. And in the Discord, everyone's just sharing their stock picks, sharing their portfolios, what they're buying every week, sharing research. And overall, it's just a really, really great place to hang out for dividend investors. So, like I said, we'd love to have you in the group. Okay. Christian, this is another really great question. Any book recommendations? I'm currently reading The Millionaire Next Door and starting Atomic Habits next. Okay. I listened to about 50% of Atomic Habits, the audiobook. I'm not a big audiobook guy, but I was listening to about half of it. And here's the gist of it. I'll give you some book recommendations in a second, but here's the gist of Atomic Habits, man. Christian, I'm not gonna, I hope it doesn't spoil it, but this is the gist of the book. It's basically like, just do small things every day. Whatever your goal is, break it up into small segmented tasks that you can do. Make a habit to do those on a regular basis, and then over time, those habits will compound into results, which will compound into even greater results. And next thing you know, is time passes, like you've reached your goals. It's basically just do small things every day to reach your goals. That's pretty much it. So sorry if I ruined it, but that's the gist of it. But as far as book recommendations go, I have a few. So I'd say my favorite investing book of all time that I think is worth a read for everyone is William Green's Richer, Wiser, Happier. Basically, it's just a collection of interviews and the author's time spent with various, world famous investors, people like Charlie Munger, and I think he had lunch with Warren Buffett, Monish Monish, who else? Guy Spear, Nick Sleep, I think Jack Bogle, probably Ray Dalio, but I'm not 100% sure he's in there. But guys like that, and it's a really great book, and it's really insightful. It teaches you a lot about investing, but also how these sort of people think about life as well. So it's a really interesting read. I think that's a must-have. I think if you don't have these books already, they're really great references. Number one is The Tao of Warren Buffett. It's a super easy, digestible book, very cheap too. And there's a link to all these books I'm talking about in the description of this video as well. I put all my book links in there. But basically, it's just different Buffettisms, like his famous quotes and stuff like that about investing and life. And when I was reading it, I'd just read one per day. Just start my morning reading one of the Buffettisms, and I'd kind of carry that with me throughout the day and really think about it and chew on it and try and understand it. And another book by the same authors is going to be Warren Buffett and the Interpretation of Financial Statements. I reference this book all the time when I'm doing stock research. It's basically like every page is an explanation of a line item on a financial statement. So it'll take you through the income statement, it'll take you through the balance sheet, it'll take you through the statement of cash flows, and it'll tell you what each thing is and how they all relate to each other. It's very helpful, and it's a great place to turn to. It's a great book to have if you're looking to learn more about financial statements, which I found to be like a never-ending process. So those three books I'd highly recommend. I just finished reading One Up on Wall Street not too long ago. That was a pretty good read as well. I would say I have some other book recommendations, but I feel like those would be really good places to start. Like I said, though, I've got links to all the books that I've read in the description. I'd recommend any of them, but yeah, definitely check them out there. So let's see here, guys. Probably one or two more questions or comments here, and then we're gonna call it a night. So okay, so Anthony here says the Discord is priceless. Man, I'm so glad to hear that. I'm stoked to have you in the group too, Anthony. And then Kama says the same thing. The Discord rocks. I'm in a few chats, and Ryan's is the best one. I prefer it to Joseph Carlson's. Man, that made my night. That's good to hear. I mean, I look up to JC a lot, and I think he's a great creator, and that's cool that our Discord group has the blows his out of the water. Heck yeah. Love that, man. So thank you. And thank you all for joining the Discord too. It's a lot of fun. Let's see here. Charles here says 77 likes in the chat. Oh, 77 in the chat and 30 likes. Bring it up, peeps. Come on, guys. Hit the like button. Hit the like button. But anyway, guys, I think I don't see any more comments in. We're all caught up here, so I think this would be a great place to call it a night. With that, Mike here says, all right, I'll join. All right, twist my arm, I'll join. Mike, you're not going to regret it, man. So, yeah, definitely join the Discord, guys. All of you guys who are not in there. It's a lot of fun. A lot of great people. You guys will connect with some really good investors, really experienced investors as well. It's great. Anyway, guys, with that, let's wrap it up. Let's call it a night. And with that, guys, thank you guys so much to just sub to Seeking Alpha. Thank you. I've been on the edge about joining or not. Snowden says I just joined as well. Mountain High. I hope you use that link in the description, man, because that kicks off a little commission over my way, which it's okay if you did it, but it's always appreciated. And I probably should mention that when I'm giving the spiel on Seeking Alpha. It is an affiliate link. So anyway, guys, thank you so much for taking the time to join this live stream and spending the last hour with me. I really appreciate all of you guys and the support you show me and my channel, and I'm stoked that you guys keep coming back for these dividend happy hours. I don't know about you, but I look forward to doing this every week. Just being able to sit down with a cocktail and hang out with you guys for an hour. It's a lot of fun for me, and I take away a lot from this too, just being able to get your guys' feedback on stocks and what you guys are doing in your portfolio. So thank you all so much again for joining. I hope you all have a fantastic weekend. Stay out of trouble, okay? Especially you, Citizen of the Year. I can't keep bailing you out, man. So just lay low this weekend and we'll be okay. But anyway, guys, have a great weekend. Stay safe out there, and I'll see you on Sunday's video. Be sure to tune in. It's going to be a fun one. So I'll see you guys next time. Have a great night.